How's been your week? Amazing stuff. I'm doing well, thank you. Hi, Hilda. How are you doing today? How has been the week? How's been the week, guys? And hi, Gilbert Sam. I believe Gilbert's one of the guys from Italy. How are you doing today? Let me know that you guys can hear me properly, okay? How has the week been for you guys? The week is going good. Amazing, right? Good to know that. Good to know that. We're just gonna wait for another minute or two, and then we're gonna try to make some progress again tonight. Tonight, I'm just gonna try to find out what you guys have learned so far, and then we'll look at some market analysis, and I will show you more of the demo account, how it works, how you start taking trades, how to open a trade, how to close a trade, just a simple, how to take simple trades, how to execute a trade, let me say it that way. The week is going great. My week has been great as well. Been an amazing week. Yeah, good week. And I was looking forward to today anyways. So yeah, let's wait for a couple of more people and then we can get into the business of today. So whilst we're waiting, let me get some feedback from you guys. How have you found the course so far? Have you learned some things, or a lot of things, a few things, or nothing? How has it been? What do you think about the course? Let me know, guys. Just use the chat section and let me know. Amazing stuff, Roy. Learning stuff, learning things, practical, amazing. I mean, it's gonna get more practical now. Because my style of teaching trading is to get all the boring stuff out of the way really quick. So all the information, all the theory stuff, reading stuff out to you. Yeah, I like to get all this boring stuff out of the way, and then we can get into the meat of the matter, which is actually trading, taking trades, executing trades, analyzing the market, choosing the right setups, knowing when not to trade, when to trade, how to focus on the quality of your trade rather than quantity of trade, okay? You don't need to take a lot of trades. You don't need to be in the market 24/7. Even though the market is always open, you don't need to always be there. You don't need to take 1,000 trades. You don't need to. You can just, you can do a very good analysis, spot very good positions, or spot very good setups, take quality trades, and hit your target. You don't. So, yeah. Who's on the star? Is it Rashid? Oh, okay. Okay, great. Okay. Good evening, Rashid. How are you doing today? I assume you just came back from work. How was work? The course has been good, says Ada. I really like it. I've been making notes as well. Amazing. That's amazing. And you do well. You do well to listen. I mean, for a young person like yourself, Ada, this is like a weapon for you, I'm telling you. You don't really know the gravity of what you're investing your time in now. You would understand in the near future. Financial literacy is a massive legacy that anyone can acquire for themselves and pass on to someone else. So yeah, amazing stuff. Okay, guys. So tonight I'm gonna try to finalize on the market analysis, and I'm gonna just go onto a demo account, and I will show you what you should be doing from next week. I said from next week you start taking trades. So I want to prepare you for that from tonight. Again, my style of teaching trading is to get the boring stuff out of the way as quick as possible so that you can actually start trading. That's why we're here anyway. So it's not to tell you some boring talk for weeks and weeks. No, you're going to spend more time in the trading course, in the 3 months trading course. You're going to spend 70% of your time actually trading. Trading, lose money, make money, lose money, make money, lose money, make money until you make more than you lose. Then you're a profitable trader. So I would actually be taking a look at your demo accounts, see how you're making progress. And if you like, I will be in a position to be able to look at your progress and tell you, okay, now you're now good to go on a live account, meaning you can now trade with live money. I would be an irresponsible tutor if I deliver the course to you and just tell you, yeah, that's it, my job is done. No, my job is not done. My job primarily is to make you a profitable trader, a profiting trader, okay? So to that end, I'm committed. So I just don't want to give you the information. I want to make sure that you're able to convert the information and you become profitable as a trader. Okay, so if you don't mind, I'll keep tabs on your progress whilst you're trading the demo account, and I will be able to tell you, now you're good to go. Now you need to pay attention more to this area, or that area, or that area. Okay, and we all grow together like that. Okay, sounds good? Does that sound good to every one of you? Does it sound good to every one of you? Let me know. Let me know. Okay, Mohammed says it's good, so yeah, amazing stuff. Okay, sounds exciting, amazing stuff. All right, so let's have a look at market analysis one more time, and then we can have a look at demo account. I want to assume that most of you, if not all of you, have your demo account set up. If you haven't, please get it done. It's very, very simple and straightforward. If you're on a computer, just go to ig.com and open a demo account and just fill in the information. They probably will give you a call. It's just a customer service call. You can answer and just say, look, I'm fine. I know what I'm doing. Thank you very much. And same as on mobile phone as well, go to your app store, download the IG app, and register a demo account. Okay, so I'm going to share my screen now. I want to keep it short and brief tonight. Don't want to spend too much time. Again, remember, Wednesdays will just be catch up. We'll push a little bit further, but Saturdays when we really get into stuff. So from Saturday, I took time to explain Forex to you. I explained how Forex is traded in currency pairs. Can you guys see my screen? Let me see if I'm sharing the right stuff. Yep. Yeah. Okay. Can everyone still see my screen? Okay, you can see everything. Amazing stuff. All right. Let's do this. Okay. So on Saturday, I spoke about the fact that Forex as a sub-market within the main market has got its own instruments. And the instruments in the Forex market are the currency pairs. Okay, and I explained the fact that the bigger currencies are always on the left and the weaker currencies, okay, not weaker, the less powerful currency will be on the left, okay? So something like this. So this is a major currency pair. Again, the currency pairs are divided into major currency pairs and minor currency pairs. So let me show you what that looks like on the actual IG platform. So if I was to go to IG, just give me 1 second. Okay. So, okay, so I'm just going to open up a chart. Okay, so this is a chart. Okay, don't worry about the chat for now. So if I go to, can everyone see my screen? Let me know you can see my screen, please. Can everyone see my screen? Yeah, okay, great. So if you look on the left-hand side here, these are the different sub-markets, okay, on the left-hand side here. Yeah, so you can see indices. You remember what indices means? Indices represents the economy of nations, okay? The top companies in a nation come together to form the index of that nation, okay? And I said, and I use UK as an example, the first 100 companies, the top 100 companies forms the FTSE 100, and then the next 250 forms the FTSE 250. Amazing, right? That's the FTSE 100. Okay, so that's indices. Okay, so if I should click on indices now, then you see the different indices here. So you can see the Wall Street. Okay, you should be familiar with that one. Yeah, that's the United States. Okay, the Wall Street. Those are the top 100 companies put together as well. So you see the German 30. That's the economy of Germany. If I should click on it and expand it, so for instance, let me show you something. Let me move this chat thing out of the way. Just give me 1 second. I want to show you something. Just give me 1 moment. Okay, so don't let me go ahead of myself. I don't want you to get confused here. Okay, I don't want you to get confused here. So so this is the indices: German 30, the FTSE 100, like Roy has typed. That's the top 100 companies in the UK. So you can see the US 500. I hardly even trade on my laptop, to be honest, because I'm very, very mobile. So I like to monitor my trades. Even if I'm in the office, I still like to monitor my trade via my phone. So yeah, this is the US Tech 100, the top 100 tech companies, the Hong Kong, France 40, Japan. So you can see the countries, you can kind of make it out. Italy, that's Italy, 40, India 50. Yeah, so you can see them all there. Those are the indices, and then the Forex, FX. Yeah, FX is over here, and you can see the first group over here, you can see up there, it says major. Okay, so these are the major currency pairs, and I showed you that on Saturday. Okay, so this is pound dollar, euro dollar, dollar yen, dollar Canadian dollar, Aussie dollar, euro pound, euro yen, pound euro, dollar Swiss franc, euro Swiss franc, and dollar basket. Okay. And if you look below it, we have the minor currency pairs. I'm not going to go through them, but yeah, the minor currency pairs. And the reason why these ones are called major currency pairs is because it's a pair of currencies of the strongest nations in the world, or the strongest nations with the strongest economies in the world. Okay, their currencies are paired together. And like I said, these pairs, you don't decide the pairs are pre-paired. Okay, they're done by the big banks, so you can't influence it. You can only look at different pair, do your analysis, and decide which one you want to trade. But you cannot decide, for instance, that I want to trade this pair against that pair if the pair doesn't exist already. Does that make sense? So the pairs have been done. So you just look into it, and the more you trade, you just know all of them. And you just know them, or you know the ones that you are focusing on. Okay, and then you follow the market. So the same way you would follow a football team, or you follow a singer, or you follow an artist. That's the same way you follow markets. Okay, and if you're someone who likes to trade forex, you then begin to follow some certain currency pairs. Okay, by following the economy of those nations to know which one is going to get stronger and which one is going to get weaker, and then you take advantage of that information. So these are the minor currency pairs, and I assume that you know what that means. These pairs are, you know, pairs of um, currencies that are not as strong as or are not as popular. Let me say it that way. Let me use that word. So the major currency pairs are the popular currency pairs. The minor currency pairs are currency pairs that are not as popular as the major ones. And then there are the metals, and then the Australasian, something like that. I don't even trade all of these ones. I don't trade all of these ones. But hey, people trade these things actively. There are some people that are just forex guys. Okay, so they just trade. They would have a wide range of portfolio in the forex market. I trade forex, but I'm not a dedicated forex trader. Okay, but I trade forex. I've got forex currency pairs in my portfolio, and I understand how to trade it. But I'm not like a one market guy. I trade across many markets. Okay, so and one of the things that makes you an exceptional trader as well is to spend time. I mean, you only get out of something. You can't get out of something more than what you put into it. So you need to spend time to look at these different instruments, check how they behave, study their patterns, and kind of like, you know, be a boss of it. You know, so you can see that there are different categories of currency pairs, there are exotic currency pairs, and there are some that are emerging markets. Okay, these are new currency pairs that are emerging. They're not popular yet. Okay, this is another place to make yourself very, very useful. You can find an emerging market and begin to try to master it. Okay, these are some of the things that I do as well, and I would advise you cultivate as a habit. Okay, so I just wanted to show you how currency pair works. This is the forex market basically. Okay, this is a sub-market within the main market. On the left-hand side here, you can see cryptocurrencies. You can see different types of cryptocurrencies. And you can see on the shares, you see different companies here. You can see Tulo, Tesla, Apple, Echo, Lloyds, Uber, Netflix, HSBC, blah, 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 Amazon, all of them are there. Vodafone, Roku, BT Group, Ocado, blah, blah, blah. They're all there. And then commodities, you can see commodities are divided into subsections as well. The first and the biggest category is the energies, where you find crude oil, which happens to be my main instrument. I love crude oil to beat. That's like my market. Okay. So yeah, crude oil, natural gas, gasoline, heating oil, and then you move into the precious metal section. You've got the gold, silver, platinum, palladium, then base metals, soft commodities. Under here is where you find like food and cotton and sugar and wheat and cocoa and whatever. In fact, shockingly and very, very funny, there is orange juice. Wait, they've taken it out now. Orange juice used to, yeah, it's here, look, there. Let me open it so you see. I'm not joking. See, orange juice is there. It's got a chart of its own. You can proper trade orange juice, guys. You can't trade orange juice. It's so funny, but yeah. You can trade orange juice. So it's crazy, man. But yeah, that's commodity for you. So yeah, and then this is ETFs. So you can see on here. I don't want to talk about ETFs yet. You would find out what they are, and then there are options as well. Yeah, but don't worry about those ones for now. Just focus on indices, forex, crypto, commodities, and shares. And you can see there are bonds and rates here as well. Okay, so you understand what forex market means. It is foreign exchange. It is trading a currency against another currency, depending on which one is going to get stronger or weaker. And I said buying and selling is not as it is in the real world. It's simply direction. Okay, buying is saying something is going to increase in value. Selling is taking the opposite side of the trade. And your action of executing this logic is just as simple as opening a trade and closing a trade. And as a matter of fact, I'm going to open a trade and I'm going to close a trade in this section so that you understand what it means. The market has slowed down now because the main volume has been traded during the day. Okay? So the market is calmed down a little bit now. It won't move as it will move between say 8 a.m. to like 4 p.m. Okay, but I'm going to take a trade. Okay, and then you would see how to execute a trade. So I would kind of like model what I would do. Okay, on the typical day. As you can see, I actually have two trades open. Okay, By the way, this is my demo account. So the best of the professionals still use demo accounts. Okay, so don't think, oh yeah, I'm just going to use demo account and then I'm going to throw it away when I know what to do. No. If you have new strategies, you have to test it out on the demo account before you try with your live money. So your demo account will be your best friend forever and ever and ever and ever and ever and ever. You never gonna use it. Okay? Even if you want to create automated systems, you will still use demo account to try it out. Okay? As a trader, you create new strategies, you try new ways to go about trading, and your demo account is your best friend. So as you can see on USD/JPY, which is pound yen, and this particular currency pair reflects it reflects perfectly the trade war, okay, between the US and China. This is the currency pair that reflects it the most. And you can see I took a trade. Let me hide this. Yeah, as you can see, I took a trade. Let me go to most recent times. Yeah, so I took a trade when the market was down here. Can you all see my mouse? I took a trade when the price was around 10494.6 down here. The price, you can see the price box on the right hand side here. Okay, so I took a trade on on this black line. No, on the blue line. You can see this blue broken line here. I took a trade there. Yeah, aiming for price to rise, okay, to around 1400. And as it began to rise, I added more position. Yeah, the first position I took was just one position, and then I added two more. And you can see the two combined position now is in about close to 831 pounds. Okay, 831 pounds, and it's not even finished moving yet. Yeah, it's still got some way to go. So for training purposes, okay. So let's say where I wanted this trade to get to, let's say it's cutting there now, okay. Let's say these trades have arrived at their destination, and I want to close it, okay. So it's as simple as you can see my demo account has got 22,000 pounds in it, 23,000 pounds in it, okay. And so funds up here shows how much I have in my account. Profit and loss shows every trade I've taken. It shows how much I'm making or how much I'm losing. Okay, that's why it's profit or loss. Okay, margin here shows how much I have put into trades. Okay, so from my main fund, I have invested 1,085 pounds in taking these two positions. Okay, so this one position plus two positions, these three positions of buying or going long or going bullish on this particular market cost me £1,085 and 94 pence. Okay, and £22,883 and 15 pence is what I have available now to take trades, and it's simply subtracting my margin from my funds, and it's even added the profit to it. So as the profit oscillates, goes up or down, my available balance will fluctuate as well. Okay, and here it's showing me what percentage of my capital I have invested in trade. Yeah, so it shows on it that I've invested 4.5% into trade. I'm going to teach you something called risk-reward ratio as well, how much of your capital you should commit to trades to be able to make sure that you don't blow your account on losing trades. Okay, we'll get to that place. So for example, let's say these trades have done their distance now, I'm happy where they are, I want to close the trade. So in the beginning, I bought, yeah, believing that the value will go up. So my action of taking these trades when I took them was I bought. So I would say I bought 3 positions of USD/JPY, okay? And when I'm closing the trades, my action will be I'm selling them, okay? So selling could be closing a trade you took in a buy position, or selling could be taking a new trade, predicting the value of a particular asset is going to go down, okay? But to avoid that confusion, just see it as opening a trade and closing a trade, okay? On the technical side or on the knowledge side of things, you understand that if you're predicting that the value of an asset is going to go up, what you do is you buy. And when it reaches your target, what you do is you sell, okay? Which simply means closing the trade that you open. I hope that makes sense. Does that make sense? It's simple, okay? So I'm using the actual what happens in the real world of trading, and then I'm trying to use another term to simplify it so that you don't get confused. So in the world of trading, you buy by taking a long position on an asset, predicting that the value is going to go up, and when price gets to where you anticipate it to get to, you sell to lock in your profit. I see a steep green on the left. Can you please tell me the dates of the steep green? Steep green. Oh, there, this one. Yeah, so that's a strong rally. Okay, that's a very, very strong rally. My chart right now is on weekly. Okay, so every single candlestick you see here represents a week. Okay, so if you wanted to know what day it was, I can check it. 1 second. You can check it. So what this means in practical terms is that for a couple of weeks, the price of the dollar just kept on going up. The dollar was very, very strong against the yen. So 1 second. So let's find out when this was. This was Monday. Okay, so it was the week beginning Monday, the 7th of November, 2016. Okay, and then this was the following week, Monday the 14th. And then the third candle is the following week, Monday the 21st. And then the next candle, Monday the 28th. And then the next candle, Monday the 5th of December. Yeah. So those 5 weeks, 1, 2, 3, 4, 5. Yeah, those 5 weeks were 5 bullish weeks. Okay, so you can imagine, and there's more candles. Okay, so even 6, 7 weeks. Yeah, took 7 weeks for price to get to the top of the channel, and you can see I've got my channel there. And then, as soon as it gets to the channel, what to do is to take your profit here and take the opposite side of the trade. If you have enough information that the price is going to turn around, you turn around. Okay. So what I wanted to show you is how to close a trade. So for instance, let's say these 2 trades I've done really well, hit my target, I want to close it. Very, very simple. I'll just click on this blue box over here, and it's going to show me, you see, show me this button to close the trade. Yeah. So I'm going to go ahead and close it now. Click on close. And then, it's going to ask me again one more time here, do I want to close the trade? So, okay. So if you see on this pop-up box of me trying to close the trade, you can see it's telling me my action of closing the trade is when I was opening it, I bought 2 positions. Closing it now says I'm selling 2 positions. So I can decide to close half of this position. Okay. I can decide to close 1. I can decide to close just 1, which means my profit on the 2 positions is £468. If I decide to lock in half of it, okay, I can decide to say, you know what, I want to keep this trade open because I have a feeling price is going to go higher, but just in case anything happens, I want to lock in half of my profit and then leave half of it to continue the trade. I can take 1 position, which is £234. I can lock that in. Or I can say, you know what, this has done well. I don't want to be in this trade anymore. I'm happy with what price has done. I want to take 2. I'm going to close everything. Okay, so I'm just going to submit. Boom. And the trade closes. And you can see it's been added to my balance here. And the other trade that is open is £370.80. You can see that's all that's left here. And if I'm fine with that one as well, I can just click on it like that. Close the trade. And I'm happy to close it. Close the trade, boom. You can see profit or loss, 0. I don't have no tradable margin, 0, because I don't have any money in any trades. My fund is £23,971, and you can see my available balance. Say equity used, nothing. I don't have no trades open. Yeah, so that's a very good quick £800 I've made on that trade. And like I said, whatever you do with your demo account, that's what you will do with your live account. Okay, so so before I take a trade with you guys, I'm just going to quickly go back. So the reason why I came on this live platform is to show you the sub-market, okay, to show you what major pairs means, minor pairs, and I believe you understand that now. So I'm going to go back to the slide. round up analysis, and then we're going to take a trade together. It's very easy. It's not hard, guys. Taking a trade and closing a trade is simple. It's just literally push of buttons. It is knowing what you're doing that matters. So I'm going to go ahead and share my screen again. Go back to the slide. Anyone have any questions so far? Do you guys all understand everything I've just done now? Yeah? Okay, cool. Yeah? All right, then great. So this is a major currency pair. The base currency is always on the left. The quote currency is always on the right. You want to buy this currency pair if you believe the value of euro is going to go higher compared to the value of the dollar. Then you want to sell this currency pair if you believe the value of the euro is going to go lower and than the value of the dollar. So you want to pay more attention on the currency on the left, which is the base currency, which is the main currency, okay? So you want to take your trade based on your evaluation of the strength of the base currency. If you feel it's going to appreciate, you want to be buying this pair. If you think it's going to depreciate, you want to be selling this pair, okay? So obviously, if the base currency gets weaker, it just means the quote currency is going to appear to be stronger. You understand? And vice versa, okay? So let's see. And I told you about the time zones. I believe you understand that now. Like I said, the market is open 24 hours. The volumes, the pace, the volume is not there 24/7. Okay, so you need to know what time to be trading. Okay. Okay, so trading hours. This is the same. Okay, so back to analysis. So do you all remember what I said about a good practice for analyzing the market? Anyone remember what I said about a good practice for analyzing the market? Okay, amazing. So if you want to take a trade, you need to ask yourself, why am I taking this trade? Okay. And I gave you 4 different analyses that you can do. And I was saying you cannot choose one. Okay, it doesn't work that way. That's a lazy way of trading, and that's a very good way of losing money. Okay, you can choose one and it appears like it's working, but the day that it's going to backfire, you're going to regret it, trust me, from experience. As a good trader, you cannot sit on a stool with 1 leg or 2 legs, okay? It's going to have to be 3 if it's a 3-leg stool, or it's going to have to be 4 if it's a 4-leg stool, okay? So you need to check these different, you need to factor in these different criteria before you take a trade. Fundamental analysis are just things that are fundamental to whatever asset you want to trade. So take, for instance, if you want to trade a currency pair that is called, if you want to trade the currency pair Euro GBP, okay, Euro against the pound, okay, so I'm going to ask you a question now. What is the most obvious fundamental? If you want to trade, okay, Euro against the pound. Yeah, that currency pair right there on the chart. If you want to trade that, what would be the most obvious fundamental to consider right now? Okay, I want to see how much of a trader you guys are. What would you be looking out for? What would be something that you can't just not look at? Something you think would drive this particular market higher or lower? What will decide if euro gets stronger, weaker? What is the factor that is very crucial to consider? Come on, guys. You can't be wrong. You can't be right. You can't be, I mean, it's fine to be wrong. I'll correct you if you're wrong, but check their indices. Yeah, of course. Because if the economy is good, their currency will reflect it. So yeah, that's one way to look at it. What was the question? If you was to trade Euro GBP, okay, we're talking about analysis and we're talking about fundamental analysis, okay? And I said fundamental analysis is an event or anything that is so fundamental in affecting the price of something. Okay, it's a price mover. It's what can decide if price is going to go up or go down on any asset. So considering Euro GBP as an asset, if you want to trade this now, what would be fundamental to it? Okay, so I hope my question, Mohammed. Look at the news for each economy, of course. But don't forget, news is an analysis by itself. Okay, so yeah, you're gonna look at news, any politics, yeah, any political headlines. Look at volatility. No, you're not gonna look at volatility. Volatility is like how many people are trading that part, actively trading that market. Of course, you need volatility to trade any market, but volatility is not an analysis. It is an analysis, but I won't put that under the topic of an analysis. I will just put it as an attribute that the market has anyways. Okay. Volatility is just the activity, how intense the activity in a particular market is. So say it as, Westfield is always busy between 9 to 11 a.m. That is volatility. Yeah. So if you want to go to Westfield when it's very busy, that is when it is very, very volatile. Does that make sense? That is volatility. So yeah, volatility, you need volatility in the market, but it's not an analysis. It's not something to analyze. We're talking about what has the ability to drive price, either high or low. Your answers have been fine. I mean, these are all things that you need to consider. Politics, we can analyze Brexit, for example, because everything depends on it. Boom. That's it. That was the answer I was looking for. I saw that Ivana put it up, but I expected her to know anyways, because she's around me. So I was waiting for someone else to say it. So yeah, all of you are correct, but the biggest and the most obvious fundamental to Euro GBP, especially because of the two assets involved, Brexit is the lifeline. Like whatever happens in Brexit, because Brexit is literally holding the necks of these two assets, the pound and the euro. The pound used to be a strength that the euro had, or the European economy. And now the pound is about to exit and stand by itself. Okay, so it's a major, and the European economy is an economy that so many economies in the world depend on. Very strong economy. Okay, so the Brexit is like the lifeline of these two currency pairs. Okay, or this currency pair, because yeah, the currency pair is made up of two assets. So this particular market is Brexit is fundamental. It's like fundamental. I mean, there are other things that are fundamental. Okay, things like consumer reports, things like unemployment rate, things like the GDP, things like manufacturing reports, things like what else is fundamental to the pound? Employment rate is key. Okay, employment rate is key because it shows the strength of the workforce. Okay, and consumer numbers is key as well because it shows how much people are able to spend. Okay, and this is why I'm saying that it is just logical for you to trade, because they measure the strength of an economy by how much you take to the shops. So to you just went to buy some juice in the corner shop next to your house, but that is part of the measurement for knowing if an economy is strong or weak. So the little £1.50 juice or milk you went to buy downstairs or just down the road from your house is a measurement. A few weeks ago, GBP pair was mad, very crazy. That's right. Because a few weeks ago was when they were having the debate, and I couldn't sleep. I couldn't sleep because I had trades that were open that was depending on the Brexit, so I couldn't sleep. I was up most of the nights, especially the Monday. The debate happened on a Saturday. It happened on a Saturday, So the Monday, my eyes was open from Sunday night. I wanted to know where the market is going to head. So yeah, so consumer rate is very, very important. Employment rate is very, very important. The bank's policy, yeah, monetary policies from the banks, very, very, extremely important. Extremely important. Political stability, very, very important. And things like terrorist attacks, things like riots, all of those things are fundamentals. It's like anything that is just presently obvious that can affect people's opinion about the strength of an economy is fundamental to whatever asset. So, for example, let's take things an asset like crude oil for an example. The tension in the Middle East is a key fundamental. The stock of crude oil, the global crude oil stock, is the most important. If there is too much crude oil and there's less consumption, the price of crude oil is just going to go down. It's going to nosedive. And if we're using up the reserve very, very quickly and people are buying crude oil very, very, but when I say crude oil, I mean like petrol and diesel and stuff, that is fundamental to crude oil. Okay, so if people are using up the reserve very, very quickly, price is going to go up because it shows that there's more demand. If the stockpile is just piling up, the driving season. So, for example, in winter now, people wouldn't drive as much as they would drive in the summer. People are not going on holiday as much as they will go in the summer. So the airplanes wouldn't require as much fuel as they would require in the summer. The automobiles, people driving, wouldn't buy much fuel as they would buy in the summer. All of those things they are fundamental to crude oil. So in the hot season, price tends to go higher because there's more demand. In the cold season, it tends to go lower. The refineries will shut for maintenance. So all of those things are fundamentals. Okay? Technical analysis is just charts. Using charts to see what has happened in the past to be able to predict what will happen in the future. Okay? So I will show you, I will explain the charts to you, but what you would need to increase on a daily basis in your skill of working with is going to be the technical analysis. Okay? Everything else you can just Google is your best friend, or some certain website that have good information. So fundamental analysis is just, to be honest, fundamental analysis is common sense. The more you trade, the more you think as a trader, and the more you think as a trader, the more you know what to look for. Okay, and you just keep looking for those things. You just keep tabs with those things when you know them already. Okay, so if you know that employment rate plays an important part in the strength of an economy or their currency, then you just check the economic calendar to know when those reports are published, and you look out for those dates. Okay, and the good thing with all these softwares now, this trading software, is they actually show you. Those information are actually incorporated in those websites, so you can see them and you can follow them. Mohammed has a question. I have a question. If I was trading USD JPY and the US economy was going down, I would buy, right? No. If you're trading USD JPY and the US economy is going to go down, you're going to be selling. Remember, the US dollar is on the left-hand side. It is the one you're focusing on. Whatever happens to the US dollar decides what direction your trade is going to go. If the US dollar is going to be weak, you're going to be selling because you're predicting that the value of the dollar is going to go down. If the US dollar is going to be strong, you want to be buying because you're predicting it's going to go up. So don't care much about the currency on the right because it's always going to go in the opposite of the currency on the left. Does that make sense? So to simplify things for yourself, obviously you will look at what's happening in the Asian market as well, as much as you're looking at what's happening in the US dollar market. But when it comes to your decision, they wouldn't both be going in the opposite direction. Okay? They won't be going in the same direction, sorry. They would always be going in the opposite direction. One may be moving faster than the other one, but if one is going left, the other one on the right, even if it's not moving right, even if it's stationary, it still looks like the lower the one on the left falls, the higher the one on the right looks. Does that make sense? So if dollar is on level 10, just an example, just a mental picture. If dollar is on level 10 and yen is on level, say 10 as well. If dollar drops from level 10 to level 2, even if yen does not move up from level 10 to like 15, even if it stays on level 10, dollar is declining and it looks like yen is rising head and shoulder above dollar. Okay, so you focus on the base currency, which is the one on the left. Whatever direction is going, that's what that direction of trade you want to be taken. Okay. Does that make sense, guys? Let me know that makes sense to you. I'm teaching you about price actions now. This is price action. We'll see it more practically when we start trading. So sentimental analysis. Okay. So again, fundamental analysis are things that have influence to move the price of a particular asset, and they are just fundamental to it. Okay. They are a no-brainer. There are things that come to your mind first if you want to trade anything. If you want to trade gold, you want to know what direction the dollar is going, because the gold always trades in the opposite direction of the dollar. Okay, when the dollar is doing well, gold will do bad. When dollar is doing bad, gold will do well. That is a basic fundamental for gold. Okay, dollar is a basic fundamental for gold. Whatever direction dollar is heading, gold is heading in the opposite direction. Okay, so that is a fundamental. Festive season for the demand of gold is a fundamental. Okay, so in the summer, people tend to do more parties, people tend to buy more jewelries, because in the winter, you're wearing jackets all over the place. You're not going to wear much jewelry in the winter. It's cold. Everybody's trying to cover their whole life. Yeah, but in the summer, you dress up, you wear jewelries. There's loads of festivities going on in terms of marriage ceremonies. People propose more in the summer than in the winter. So people would buy things that are made of gold more in the summer. Okay, so the demand for gold tends to go higher in the summer and tends to decline in the winter. So weather plays an important fundamental in most of these things as well. And I already told you the role that weather plays as well in commodities like crude oil, the hurricanes plays. That's a weather condition that affects it. Okay, so whenever there's hurricane or tsunami in the Middle East, the price of crude oil goes up because it means the tsunami will destroy refineries, will make them inactive. It will destroy the roads, and they won't even be able to. The staff won't even be able to show up at work. There will be no mining activities going on. There will be no refining activities going on. That means people will have to use up the reserve, and there is no production going on. So price is going to go up. Okay, so hurricanes and tsunamis and things like that, they are fundamental to crude oil. Middle East tension. Whenever there's like an attack on a oil tanker of a particular major oil country, the price goes up, okay, because a large amount of crude oil has been destroyed and wiped out, okay, so that's less stock for crude oil, and price tends to go up. So all of these things are, again, like I said, my job is to sensitize you to these things, and it will make sense. And the more you trade, you will just know what to look out for, okay? I will need to say it, and then you would grow into it. You just know what to look out for. And again, you won't have to look too much. It's always there. Summer is a good season for gold. That's right. That's right. So summer is a good season for gold. So fundamental, you all know what fundamental analysis is now. Please give me a thumbs up. Let me know you know. Okay. And it's there on Google. I'm going to put some websites in the group that you can have a look at, play around with it. You'll see analysis section. Go there. You'll see different good analysts. They will analyze different markets. They will tell you what they think about it. And as a trader as well, you'll be able to look at some things and say, oh yeah, I agree with that. That one, nah, I think I have a different opinion. Yeah. So you will get to that place. Technical analysis is chat. We're going to get into that on Saturday. Sentimental analysis is basically what influential people in the trading world think about certain markets. Okay, so if I tell you what I think about the gold market now, I am causing you to pick a sentiment. Okay, I am influencing your sentiment. So if I go on about the fact that the crude oil market is terrible now, it's declining, I give you 1,000 reasons why it's going to get worse, I am already influencing you. So if you're ever going to trade crude oil in near time, you're most likely going to be selling, because you say, look, Victor knows about this thing. He said it's going bad, so I'm just gonna be looking for opportunity to sell. Okay, so that is sentimental. Okay, so if I listen to what Warren Buffett has to say about the Wall Street, that is, I am allowing him to create a certain sentiment in me. And among all these analyses, if you ask me, oh, which one is the most powerful? Which one should I look out for more? It's crazy. Okay, let me just ask you that question. Which of these do you think is the strongest price mover? Fundamental or technical analysis, which is looking at what has happened in the past to be able to predict what will happen in the future, or sentimental analysis, what people have to say and what influence they have on people who look up to them. What do you think is the strongest analysis? And of course, news, which is just headline. I want a chorus answer. Fundamental, fundamental, fundamental. Anybody else? You shouldn't take too much time to think about this. Just sentimental. Go on. Anyone else? I want to hear what everyone has to say about this. Fundamental. Rashid. Go on. Anybody else? What do you think is the strongest? Fundamental ADA. Okay, so I personally, when I encountered this question when I was learning to trade, my answer as well was fundamental, because I just feel, you know what, whatever is just a no-brainer, that's where everyone will be looking. That is true to some extent, but in the real world of trading, fundamental is not the strongest price mover. Sentimental analysis is. So let me see who says sentimental. Let me see. So when we do our first link up, I'm going to have a price for the person. Who is the person that says sentimental? Roy. Yay. That was Roy. Actually, Roy, first of all, said fundamental. Then he changed his mind and he said sentimental. But yeah, Roy, go ahead. All right. Sentimental is the most. Because think about it. The people involved in the market are human beings like you and me. Okay? And human beings tend to listen to other human beings who they believe know better than them. Okay? And not just know better than them, some people have access to certain information that some people don't. Okay? So imagine if I work in Financial Times. Yeah? Let's say I work in Financial Times. There are some information that I would have access to that you guys don't have access to. So I would be able to come and tell you guys, look, this is what's going to happen to this. There's a report that is going to be published tomorrow, and this is the effect it's going to have on the market. And anyone who follows me, who relies on the access that I have, would rely on me for, call it tip. Yeah, I give a trade tip to say, look, take a trade in this direction because this is what will happen. Okay, so there are people who people trust to either have access to information that they don't, or they are experienced enough and have been around in the game enough to be able to interpret market sentiment or market tantrums and be able to tell you this is what's most likely going to happen. And because of the trust you have in those people, you're most likely to be swayed by whatever opinion they have of the market. So I say that to say sentimental analysis is the most powerful. So you don't want to ignore what other traders are saying. When I say other trader, I don't mean like every Tom, Dick, and Harry. I mean people who really know what they're doing. Okay, and hence this is why we're creating a community, because there's always safety in number, and safety in picking other people's brain. Because you may think you've got everything covered, and someone else just sees what you didn't see. And that may be a game changer for you. So yeah, sentiment analysis is the most powerful analysis, is the most powerful price mover among all the analysis. But does that mean that it is the most important one? No. Every single one of them is equally as important, because some people will draw sentiment from fundamental. Some people will draw sentiment from technical. They will say, look, every single time price reaches this level at certain time of the year, this is what happens next. So because of that, I'm just going to take that trade in this direction. Okay, and they may then begin to spread that sentiment, and they may get other people believe in them. So every single one of these, they play a unique role, and I will be chronicling them to you. News just has a mind of its own. I don't care what fundamental is saying. I don't care what technical is saying. If a headline drops and is strong, it just pulls the market, especially when people are waiting for a report. So for example, the US and China had a meeting. Trump and the president of China has had a meeting now. Everyone is waiting for an headline that would say the outcome of the meeting. So as soon as the headline drops, boom, it pulls the market. Okay, so news is going mind of its own. And if you're a trader, come on, man, you should be checking out for the news. So that is that about analysis. Again, when I say that is that, I don't mean that is it. Okay, I mean we'll put flesh on it as we begin to trade. Okay, so I'll tell you when I'm looking at this, this is the analysis I'm doing, and you would even know. You would know this is technical is doing now. This is fundamental is doing now. This is sentimental is doing now, and we'll have a look at some news, and I will tell you how I interpret news, what it means. And of course, there are some things that you already know. You just don't know how to convert it into trading decisions. I will show you how to do that as well. So what's the time now? Okay, so our time is fast spent. So let me just take a trade and then we'll call it a day tonight. So I believe you all understand all these different analyses. And now you can understand why I illustrated it as a stool. Okay, so let me go back to my chart, take another trade. Okay, I'm going to take in the same market. Okay, close some trade here now. I'm going to take another trade in this same market and we'll take it from there. So let me give you a quick rule of thumb of how I take trades. I don't expect you to understand fully this now, but you will get to understand it. I look at a long-term direction of a market, looking at bigger time frames. So I will use weekly time frames to look at where this market is going in a long term. But if I want to execute a trade, I will use a shorter time frame to time my entry. Okay. What you don't want to do is know that the price of something is going to go down, but get into it when it still has some upward movement to do. So what will happen is you will take the trade knowing that this market is going to go down eventually, but the market still has some upward movement to do. And as it begins to move up, that is minus. You're just going to see minus. And that will terrify you and you would panic and you will close the trade. And as soon as you close the trade, the market will start moving in the direction that you already anticipated before. And sometimes you may not even have enough money to withstand the initial opposite movement before it starts moving in your direction. So what will happen is you was right, but you would have lost money or you would have messed up your account. So you want to use bigger time frames to predict where the market is going eventually in long term, and you want to use a smaller time frame to time your entry. So you want to get in, the whole logic is you want to get into a trade in a particular direction when you know the market is ready to start moving in the direction as soon as possible. So you want to go as low as 5 minutes to say, look, within the next five minutes, the market will start journeying in the direction that I want to go. I don't want to get into a market now if I feel this market may still have 4 more hours before it makes the decision to start moving in the direction that I want to go. I'm going to wait for 4 hours. Or I can take a temporary trade in the direction that I feel it will go in the next 4 hours. Then I will take my major direction. I'll close that trade, lock in my profit, and then I'll take my major direction. Okay? So for instance, if you look at this chart in front of you, you can see this sloping line up here. Yeah, I have identified it that it's formed like a ceiling for price on a falling channel. Okay, so every time that price gets near to you or touch it, price pulls back, touches it here again, pulls back, touches here again, pulls back, went all the way down, and when price recovered and came up, as soon as it touches the line again, it begins to pull back. Yeah, fell all the way down again. And if you look at this falling down as well, price seemed to find a floor. Again, I will explain all of this to you in technical terms. It's called support. Price seemed to find support around this level. Okay, this is the first touch. This is the first this is the first point where this support caught the price, and price fell from this level again. Boom, go around this area and pull back up. And then the third time around this area again, pull back up. So we can say this is a strong floor for price, and another word for that is called support. Okay, and we can say this sloping line is a resistance for price. It forms like a roof. Price don't seem to be able to violate this line. Okay, so price is respecting the line. There, touched it multiple times there, one more time here, and you can see as price is pulling up here again, I can anticipate that price will at least come up to touch this line again. Okay, and I will expect again that price will respect it and pull back as it's done this time. This time, I'm expecting that to pull back again. And when it pulls back, I'm expecting the price would at least when it gets to this level, it's an area that over every trade I will be keeping an eye on. These are critical price points. Okay? So, what trade are you going to be taking right now if you was to take a trade in this market right now? Okay, I would say I'm going to be buying. Okay, I'm going to be buying because in the near time, price is still going to pull up to come and touch this top line. So if I was to take a trade now, again, this is a weekly. Okay, if I was to time, should I take a trade right now? I can go to like 5 minutes and see what it's saying. Okay, so on a 5 minutes, yeah, I won't actually be buying yet. Okay, on a 5 minutes, I won't be buying yet because you can see that today, which is Wednesday, price started around here, came down a little bit, went this high and came all the way down here. Okay, so today has been a bearish day in the USD JPY market. Even though today is a bearish, so imagine what I was saying. Imagine someone looked at this on a weekly time frame and says, yeah, the market is going up. It's got a little bit of distance more to do to go touch that weekly top line. And imagine the person decided to buy yesterday. Okay. Now, what would have happened is throughout the day, they will just be in minus, and the minus just keeps increasing. Now, it doesn't mean that the analysis was wrong. It just means their timing was wrong. Does that make sense? They made the right decision in terms of that is where the market will go in good time, but they didn't time the trade properly because right now the market is still going down. Hence, the reason why if I go back to the weekly chart now, you can see that this week, yeah, the weekly chart, which is the most recent candle on the far right here, you can see that is a negative week so far. At least it hasn't turned positive yet. Yeah, so track back few candles, positive week, a bit of a negative week, a little bit of recovery, negative week, a brighter positive week that overshadowed the previous week. Okay, so every loss that was made this previous week was recovered this week. Couple of little, not much activity, 2 positive weeks, another negative week. This kind of situation repeated itself. A very good positive week that erased the previous negative week. And the week that we're looking at currently now is still positive. Today is Wednesday. It can turn around on Thursday and Friday. Who knows? But hey, this red candle here just shows the activity between Sunday, Monday, Tuesday, and Wednesday. Okay? 4 days activity. If we was to change this to daily candle now, you see this candle right here, this last candle, this flash red candle will then be broken down into like 4 candles. Okay? But it doesn't erase the fact that we believe that probably next week, okay, price is going to pull up to this top line. Maybe next week, maybe 2 more weeks. Maybe we still need 2 more small candles like this, or maybe a very big, strong, bold candle like this to bring price up to this level. So based on that, I'm saying if I'm looking at what decision would I make looking at 3 weeks from now in this market, I would be buying. Okay, because I have faith that price will pull up here. But if I wanted to trade in the next couple of hours, what would I be doing? I probably will be selling because this week is still negative right now. And there may still be some more negative movement before, we eventually see the positive. So this is technical analysis, basically. Okay, this is technical analysis. But let's say, for example, I have a lot of money. Look, my account is 23K. So I don't care what little negative is left here. I just know over the next 2 weeks, the market is going to be positive. So because of the size of my account, I can weather the storm. If the market still goes a bit negative for the rest of the week, I just have faith, not faith now. I know for sure that the market is going to cover the remaining distance. So I'm just going to go ahead and buy. Okay. But again, you understand my position. So if I was going to buy 1 position of this, 2 positions of this is going to cost me £724. So let's reduce it to 1 position. Okay, £362. Place the trade. Boom. That's it. I've placed the trade. Okay, and as soon as I place it, you can see on here, it draws a line across the level where I've taken the trade. The fact that it's blue and it shows +1 means I took a buy position. Okay, a long position, and you can see. In here shows my profit or loss, and it's going to be the same thing as it is up here. So again, that's my fund, profit and loss. That's how much it's cost me to take this trade, my margin. That's how much I have left to take other trades should I want to. This is the fraction of my account that I've used, 1.5%, which is decent. Again, I'm going to be telling you how to decide that
Because the market is slow, you can see that it's just moving between 30p and 20p, 10p. Now I've broken to positive, or it's back again. So that's how the market. You can see that it was blue for like 2 seconds now. And I can decide how much profit I want to make. So I can say, look, I'm looking at price to come up to around this level to touch this line, so we can see how much that would be. I can drag my quick profit to where I'm anticipating. So if price gets to this level, I'm anticipating maybe this level, yeah, that will be £180 profit for me. And I can decide how much I want to lose as well. I can say, look, I don't want to lose more than, say, £20. Say, look, £20 is how much I'm willing to risk in this trade. Anything more than £20, close the trade for me. I'll take the loss and walk away. Okay? And if it moves in my direction, I want you to lock in my profit at this level. Okay, so I've set both my profit and loss right now. You can see I'm already in profit. Yeah, it's broken into the blue. Can you see there? It's broken into the blue. Yeah, doesn't mean that I'm right yet. Okay, like I said, there's still potential for a little bit of fall, but in the long run, I believe price is going to pull up. So we will keep checking this trade together. We'll see how it goes. But yeah, that is how it works. That's how to take a trade. And if I was going to close it again, remember, I'll just click on this box and click on close, boom. And whatever profit I have here, it's going to lock it in. If there's a loss and I want to cut it, once I click it, it's going to subtract it from my balance. And that's it. So already, right where on the course, I've already broken into profit. Okay. So that's how to take a trade. That's what you guys are going to be doing. And of course, when you take a trade, you just keep monitoring it until it gets to your target, or if you feel like, you know what, I'm happy with what it's done so far, I don't want to wait anymore, or I feel the conditions are changing. I don't think price will reach my target anymore because of changing conditions. Lock your profit and find other trade setups. So, yeah, so we'll keep an eye on this trade in subsequent. Probably on Saturday, we'll see what has happened on Thursday and Friday. Okay, you can see it's going back and forth. So that's it, guys. Does anybody have a question? Anybody? Do you think it's risky to take a long-term trade when your capital is small? Yeah, I think it is risky because price can go back and forth. So if your capital is small, the back and forth can mess you up. So for example, if you're buying, predicting price will go up, if price decides to go low before it starts going up, it could wipe your account clear and then starts going up. So you may be right in your long-term decision, but you may be wrong in your timing. And if you have a small account, you don't even have the firepower to weather the storm if the market decides to throw tantrums, except if you time your trade so perfectly. So for example, if you've seen this trend line up here, you've seen already here that, look, this trend line seems to be strong, okay? It's resisted price twice. And when price began to pull up here, you're already anticipating that when it touches this line, I'm going to take a sell position because on a weekly chart, the value of the dollar has been declining for a very long time now. Okay, so let's just take, for example, this top of channel here is around the ending, the last quarter of 2018. Yeah, so into 2019, price has just been declining. So you could have timed that when price touches this line again, I'm going to take a sell position. I'm going to leave for a very long time. So if you timed it right on the day that price reaches here, and right on the hour or right on the minute that price reaches it, and you take a sell position, okay, and price just begins to decline. You see, couple of 1 week, 2 weeks, 3 weeks, you don't even need to touch your trade. You're just going to be smiling to bigger profit and bigger profit and bigger profit and bigger profit. But imagine you took a sell position at the top of this green candle right here, thinking, oh yeah, since price pulled back on this level, maybe when price gets there again, it won't touch this top line, it will just pull back again. Look, boom. Eventually, look, price went down, but before it went down, it went up to touch the line. So this little up, this is 2 weeks or about 3 weeks of price movement of this could wipe you out. And as soon as you're wiped out, price will start going down. So your long-term position, you was right. Your timing was wrong. So I would say it depends on how you approach things. If your timing is impeccable, you can take a long-term trade with a small capital if you're able to time your trade like bang on, and you would be in good profit. You can see my profit is turned to loss now. Yeah. So it's going to go back and forth, back and forth. Again, you understand how this works. On a long time, I'm anticipating price will go up. In near time, price will go down because it's got potential to go even lower, but I have the firepower to weather this storm. So, hey, I don't care. Price can do whatever it likes. It's going to get to my destination, and I'm going to take my profit. So we'll see how that goes. I mean, you can't always be 100% right, but most of the time, as you increase in experience, you will get more right trades. Does that make sense, every guy? So thank you very much for joining again tonight. This session is recorded. I still haven't had time to sit down to do the class. So I've started uploading the stuff on YouTube. The only reason why I haven't shared the link is because one class is missing, which is our first class. I'm going to try to do that tomorrow. As soon as I do that tomorrow, I'll put that in there and I'll put the subsequent one so you have the full catalog so you can go over there and listen to it again. So yeah, this particular class is recorded and every class will be recorded anyway. So thank you guys for joining again tonight. It's been fun talking to you guys. I hope you learned something again tonight. Let me get a quick response from you guys. Did you learn something tonight? Was it informative enough for you? And then we'll call you a night. So yeah, guys, let me hear what you have to say. And then we'll call you a night. We'll call you a night. Okay. Amazing Roy. Amazing Mohammed. Amazing guys. Everybody else, I haven't heard Gilbert's voice at all tonight. Like, I didn't hear nothing from him except when he said hello to everyone. I want to assume that you listened to the class and understood what we. Again, you can ask questions in the group chat. So on Saturday, we would look more into technical analysis. I will talk to you about charts, teach you how to read the charts. Bear in mind, we still have technical indicators to look at. That's another fun. So we're going to look at Fibonacci, Elliott wave. We're going to look at different price actions, different technical indicators to help you. One popular one that I use is moving average. I'll tell you what that is. I'll show you how to use those things. Just fun stuff. But yeah, and from next week, you will start taking your own trades, and then we'll check in, we'll compare notes. Okay, I want to see who's really on this thing. So amazing stuff. So thank you guys for joining tonight again. We'll come back on Saturday to do more. So have a lovely night, and I'll see you guys on Saturday. If you have any questions, please ask them in the group, and I will be able to answer you. In the absence of any other question, have a lovely evening and take care of yourself. See you on Saturday. Bye for now.